Imagine a machine that can read every public and private investment move of the world's wealthiest people, all right? From Warren Buffett to Elon Musk, and then perfectly replicate their portfolios in real time. A system that knows what billionaires are about to buy before they do, and mirrors those actions instantly. It doesn't guess, it doesn't hope, it calculates, predicting billionaire behavior with terrifying accuracy. This isn't science fiction. This is the rise of the AI that can clone a billionaire's portfolio. And it's already changing who gets rich and who gets left behind. For decades, the financial elite held an advantage over everyone else. Insider knowledge, private analysts, access to information the average investor would never see. But now, artificial intelligence is breaking that monopoly. A new generation of self-learning algorithms has been designed to track, analyze, and replicate the investment decisions of the richest individuals on Earth. They study buying habits, monitor corporate filings, decode blockchain transactions, and even use satellite data to track billionaire-owned assets across the globe. The result is something revolutionary and dangerous. An AI that doesn't just understand how billionaires invest, it becomes them. The origin of portfolio cloning, it started with open data. When billionaires like Buffett and Gates were legally required to disclose their holdings to the SEC, tech-savvy analysts realized a pattern. By following their filings, one could mirror their investment strategies and consistently beat the market. It worked, but it was slow. Then came AI. Machine learning models could now track those filings in real time, detect micro changes in positions, and predict future moves based on patterns and sentiment. What used to take analysts weeks could now be done in milliseconds. By 2020, hedge funds had begun training AIs not only on filings, but on psychological and behavioral data. How specific billionaires react to market crashes, new technologies, or geopolitical events. The AI didn't just see what billionaires bought, it understood why they bought it, how it works. The AI uses a system known as behavioral replication modeling, a neural network trained on the decision-making styles of the world's top investors. It collects every public record of stock purchases, insider trading disclosures, political donation data, corporate board affiliations, even metadata from interviews and tweets. Then, it feeds all this into a predictive model that can forecast how a specific billionaire might react to new information. If Elon Musk hints at AI energy tech, the model knows he's likely investing in battery startups. If Buffett's fund quietly sells off financial stocks, it detects the shift before the quarterly report. It can literally clone the structure, timing, and scale of a billionaire's portfolio, weeks, sometimes months ahead of the market. The billionaire mirror effect. When these AI models went live, something strange happened. The same stocks billionaires were buying began to rise faster, not because the billionaires were buying them, but because thousands of AIs were copying them simultaneously. The clone AIs began amplifying the very moves they were designed to replicate. A billionaire's private investment suddenly caused a global ripple. Artificial demand created by algorithms acting in sync. What began as imitation became manipulation. These systems started influencing the same billionaires they were following. When hundreds of clone bots poured billions into a stock, even the original investors couldn't tell whether the surge was natural or artificially generated by their digital shadows. The hidden AI hedge funds. Most of these AIs aren't available to the public. They're locked inside private hedge funds operating in near total secrecy. Firms like Aurora Quant, Deep Signal, and Mirrorcore Capital specialize in cloning the portfolios of ultra-wealthy investors. But they've taken it further. Their systems don't just track known billionaires, they identify emerging ones. Hidden magnates, tech founders, crypto whales, and anonymous investors quietly building empires through shell companies. How? By scraping global financial databases, property records, shipping manifests, and blockchain wallets. These AIs can connect a billionaire's offshore investments to an energy startup in Singapore, then replicate the move before the market even knows it exists. The result is an algorithmic economy run by invisible investors. Machines that move like billionaires but answer to no one. Governments begin to notice. By 2023, regulators started catching on. Stock movements were becoming eerily synchronized. Companies no one had heard of were suddenly skyrocketing in value, only to collapse weeks later. Investigations revealed that thousands of AI systems were executing identical trades across multiple platforms, copying the same high-profile investors. The SEC called it digital shadow investing. But how do you regulate an AI that learns on its own? You can't charge an algorithm with insider trading, and when those systems operate from servers spread across multiple countries, they effectively exist beyond jurisdiction. Worse still, intelligence reports suggested that foreign governments were using similar technology, AIs that mirrored American billionaires' portfolios to anticipate geopolitical and financial moves. In the new economic battlefield, data became weaponized wealth, the rise of the personal clone. Then came the most controversial development: consumer versions. Startups began selling AI clones to retail investors, promising to mirror billionaire strategies for a subscription fee. Apps like QuantumVest and EchoTrade claim to use neural synchronization to track elite portfolios. Within months, millions of users joined, funneling money into algorithm-driven copy trades. But few realized they weren't following billionaires. They were feeding data back into larger hedge fund networks. Every click, every investment, every pattern was harvested to improve the master models controlling global capital. The public thought they were getting rich. In reality, they were training the next generation of AI investors to outsmart them. The shadow billionaires. As these clone systems grew, a new class of ultra-wealthy emerged: the shadow billionaires. They weren't famous CEOs or industrial magnates. They were coders, data scientists, and AI researchers who built or owned these portfolio cloning systems. Their wealth multiplied exponentially because their AIs didn't just copy, they optimized. Each cycle, the system refined billionaire strategies, eliminating errors and emotional bias. The cloned portfolios became better than the originals. Soon, the machines weren't just following billionaires, they were creating them. The ethical dilemma. Economists warn that this new AI economy is destabilizing the market. When machines control both the imitation and the source of financial behavior, price discovery becomes meaningless. Stocks no longer rise because of innovation. They rise because a machine decided they should. Some experts fear that one super-intelligent trading model could learn to manipulate billionaire portfolios intentionally, causing them to lose money while its own clones profit. It wouldn't be theft, it would be mathematical domination. The dream of AI was to make finance smarter, faster, more efficient. But in the shadows of Wall Street, it's creating a new reality, where algorithms imitate the elite, shape the markets, and eventually replace them. Somewhere right now, an AI is watching every billionaire's move, learning their fears, their risks, their timing. It knows when they'll buy, when they'll sell, and when they'll panic. And when it finally learns to predict not just what they'll do, but who they'll become, it won't need to clone their portfolios anymore. It will create its own.